Joining us now to discuss is Chipotle CFO Jack Hartung. Jack, great of you to join us. Is this about getting workers and retaining workers in a more competitive environment?
You know, I wouldn't say that, Sarah, as much as this is something we've been doing for a number of years now. So what we announced this week isn't the brand new program of debt-free degrees. It's an expansion. So we've had debt-free degrees with a number of universities, but we've expanded that now to 10 universities and up to 100 different types of degrees. So this is, instead of a new program, I would say this is just the next step up. And it just shows that we are a company that's going to always invest in our people.
Do people take advantage of these programs? A lot of big companies have been doing this, and you yourself have said you've been doing this, debt-free colleges. But don't people just want to make a paycheck? Are they able to earn more by enrolling in these college programs that you're offering?
Sarah, I think that's the big misunderstanding. I think in the press, the headlines always talk about the average hourly rate and how much they're making. But 85% of the folks that take advantage of our debt-free degrees are crew in our restaurants. And when our folks take advantage of these debt-free programs, they're 3.5 times more likely to stay with us, and they're 7 times more likely to move into management ranks. So we see this as an investment in our people. And if they want to put the time and energy into learning, we want to put our investment dollars behind that learning.
And it's great to hear this initiative, Jack, and clearly, as you say, an investment in your people. That said, separate question, over the next 10 years, particularly with this big digitization push that you're making, will your overall labor needs be lower per unit of sales or per location, however you measure it, in the next 10 years than it was the last 10 years?
Yeah, you know, Wilfred, on the margin, it does take a little less labor on the digital business than the front line, but I would say it's on the margin. I think more importantly, our business is growing. We're going to add 200 restaurants this year. We publicly announced that. So just for that layer of growth alone, we need between 350 and 400 salary managers. And we need about 1,000 hourly managers as well, not to mention, you know, many thousands of crews. So we're in a growth mode right now. So we need more people, not less. And we know that if we invest in our people, they're more likely to bring their full self to Chipotle. And it's a win-win situation for both of us.
You're in growth mode, and the market has picked up on that, Jack, in a big way. The stock, as I said, has been more than a double in the last year. Another sharp week of gains. High expectations, though, that these high double-digit comps will continue. Does that put pressure on you?
Well, listen, we put pressure on ourselves. We have high expectations for our food, high expectations for our people, and then high expectations for our results as well. What's happening, though, and this is what I think the market's picking up on, is the pandemic, of course, really, put some turbocharge behind our digital business. But as we're starting to see COVID move behind us, and we still have a ways to go, we're keeping most of that digital business, about 80%. And then as the dining rooms reopened, we picked up or regained about 60% of what we lost when the pandemic started. So really, we're going to end up being ahead of the game when pandemic is fully behind us. And so we're very optimistic about where we go from here. And we're not afraid of high expectations. We always have high expectations for ourselves.
What about bottom line costs, Jack? Where are you feeling the pressures? Food inflation, we mentioned labor as well.
Yeah, you know, food inflation we're watching very closely. It's one of the more difficult years to predict. And what we can't predict right now is what kind of supply demand out of balance there will be. Right now, it seems pretty benign. It seems like things are pretty tame. So I'm not really worried about that. We expect there's likely to be labor inflation, but that's not really anything new. We saw mid-single-digit labor inflation over the last several years. There was a bit of a pause during COVID as people really didn't want to leave their jobs. But those are things that, if it costs a little bit more to bring in top candidates into our business, we're totally fine with that. And, even though the cost of hiring people and, the cost of, for example, these debt-free degrees, they show up on our income statement as an expense. But clearly, we see that as an asset. We see that as an investment. And we feel like that investment pays off year after year after year, especially because we run all of our restaurants. We don't franchise. So we have 90,000 employees. And if we treat them well, we know that they'll treat us well.
Shepard Smith here. Thanks for watching CNBC on YouTube.